Welcome to today's session and thanks for joining. I'm very happy to see you here today. In these weekly videos, I show you how you can swing trade profitably in any market condition, up, down, or sideways, by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. If you stay with me, I'll try to find some trading candidates using live systems later today. To use weekly or daily to decide on trading direction. I thought this will be an appropriate topic to discuss in the current market condition. Choosing the right direction for swing trading makes all the difference in the final P&L outcome, profit and loss outcome. How to decide the direction can be confusing to beginning traders. Even experienced traders sometimes make mistakes, though their mistake is probably not so much in terms of understanding but in terms of following what they already know. What do they know? We'll come to that momentarily. Deciding the direction can be challenging because different intervals show different trends or movements. Weekly may go down, daily may go up. Which one to use for swing trading? A similar concept applies to day trading. The 30 minutes may go up, 5 minutes may go down. Which one to use to decide your trading direction? The answer is the same for swing trading and day trading. In these videos, I focus on swing trading. In general, the question is this: how to use the longer term and shorter term intervals to decide your preferred trading direction. Remember, I said preferred trading direction. I didn't say market trend, because we may take reversal bearish trades in an uptrend. That's why what is more important for trading is the preferred trading direction. Of course, the market trend is also important. Finally, we take the trade in our preferred trading direction, not necessarily always in the market trend direction. In any case, the general question is this: how to use longer and shorter term intervals to decide your preferred trading direction. We will look at that throughout today's session. The broad idea is this: use weekly to select your preferred swing trading direction. Wait for the daily to go opposite first. That is, if the weekly is bullish, wait for the daily to go opposite, bearish first, and then tilt back to the weekly's direction, that is the same bullish direction. Then take the bullish trend, and the opposite conditions will be applicable to a bearish trend. So use weekly to select your preferred swing trading direction, wait for the daily to go opposite and tilt back to the weekly direction. That will give you lower risk and higher probability trades. Is that all? No. Many people use weekly daily only on technical analysis to decide their trades. You can be more accurate, I may say much more accurate and more profitable by applying the same concept to breadth analysis. including that for sector industry stock breadth, technical breadth, market internal breadth, etc. For all of these breadth signals, also wait for the weekly and daily to be aligned. So let the weekly, sorry, not let, if the weekly is bullish, let the daily turn bearish and then turn back to bullish. When they are aligned, then you may take the trend. I see a question on YouTube. Yes, it is live. All my market recaps are live. How do we carry out this breadth analysis? That is done using Q, and I can or you can use Q for the USA market as well as global markets. This is an example. This is sector industry stock breadth. Weekly period is the 5-day period. Here it is bearish. Daily period is bullish. Weekly is bearish, daily is bullish. Then you may wait for the daily to turn bearish again and then look for bearish trend following short trades. Now weekly is bearish, daily is opposite colored green bullish. Wait for daily to turn bearish again, and that will be the time to take bearish trend following trades. The same concept as is in the technical analysis, but here using the sector industry stock breadth. However, many traders make a mistake on this front. The above concepts are valid only for trend following trades. Q has trend following trade setups like flow and pullback. The earlier concepts, that is, let the daily go opposite to weekly and then be aligned again with the weekly, that concept applies only to the trend following setups, flow or pullback in Q, and of course trend following setup in any other system. They do not apply to reversal trades. What about reversal trades then? Q has several reversal setups, each for a different market condition. Bounce setup is for exhausting market, and headwind setup is for trend reversing at the top or bottom. For these reversal setups, the approach is to be different. For reversal trades, weekly and daily will usually be in the opposite sides, meaning weekly will still look mostly bearish when you are buying the stock using reversal setup. You take the trade when you get a proper 360-degree setup. That is how the reversal trades, bounce and box, are different from trend following trades. Then there is another setup for sideways market. It is also a reversal setup, reversal of the immediate move or immediate leg. But it is different from bounce and headwind, because in bounce and headwind the reversal is over a longer period, usually across several moves or swings. For box setup, depending on how sharply price is reversing at the edge, weekly may be neutral color or of opposite color of daily. Once again, unlike the trend following trades, weekly and daily don't need to be aligned to take the trade. You take the trade when you get a proper 360-degree setup. Here is an example. The weekly 5-day period, again using sector industry stock breadth, not using technical analysis. Weekly is bullish and daily is bearish. We just use the color. And now you may look for bearish reversal trades. By the way, both of these breadth charts are live systems. This one is for the USA market. So USA market weekly is bullish, daily is bearish. You may look for reversal trades. Or this may be India. I'll find out. I think this is India. This is actually India market. And this is the USA market picture. I will come to the USA market using live systems. And this is as of Friday's close. India market, one may look for reversal trades at the top. Greetings. I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these channels are open to the public and you are most welcome to make use of them. I use all the Q components to do the 360 degrees analysis. All the Q components run on the Metastock platform and the technical analysis runs on TradeStation as well. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. That was the last slide. For several weeks, I didn't look at the global markets. Let's have a look at the global markets today. Starting with Australian market index, all ordinaries. All ordinaries is moving inside a box. At the top, it displayed the bearish headwind cluster, pulled back to the value area as one would expect. At the top, when the bearish headwinds came and the bear release came, that would be the time to look for reversal short trades using the box short setup. Those would be profitable most likely because price came down for the index and now it is at trend line support and also the yellow direction line support. This is not a place where we would like to short. Also, when an instrument is inside a box and it is right in the middle of the box, that is a no trading area. So in terms of trend, all ordinaries is moving sideways inside a box. In terms of preferred trading direction, there is no preferred trading direction at present. Waiting is the Q choice. Let's look at Japan's topics index, and though I am doing this analysis on global markets, the same analysis is applicable to any market. Japan's topics index is also inside a range. Now it is inside a triangle pattern, not inside a box, inside a triangle pattern. The weekly is having a doji candle, indecisive candle. So here trend is sideways again, but inside a triangle, not inside a box, and there is no preferred trading direction. I'll wait before taking any trades, and I'll wait for it to break to the upside and then take long trades. I'll wait for it to break to the downside to take short trades. Let's look at China market, CSI 300. China market is in an uptrend with higher high, higher low in the daily interval. There is a yellow direction line support just below Friday's close. If price can go up from there, then it may give a pullback buy setup. If it falls down from the yellow direction line, we will not have any immediate trade setup. We'll have to wait to see which kind of setup comes up next. Currently, the uptrend is still intact in the daily interval. So trend, uptrending, preferred trading direction, again none. So far in none of the global markets, I see any low risk buying or shorting direction. Let's look at UK's FTSE index. FTSE index is also in a clear uptrend with higher high, higher low, has trend line support, no trend line resistance. It has pulled back from the recent swing high. In the daily, the traffic light color is bearish. There is a bullish indecision at the low. If it can go up from here, or it could be even better if it comes down little bit more, stops at the yellow direction line or the trend line supports and goes up from there, that will give the next low risk buying opportunities. Right now, because of the red color candle in daily, there is no buy setup. It is still in an uptrend, but we have to wait for the next buy setup. Lastly, let's look at the India market. Okay, my meta stock closed down, it is reopening. Let's look at the India market, Nifty 50 index. It is very much in an uptrend. Earlier it was inside a box, and just now it broke out of the box on Thursday. So now it is uptrending again. Earlier when it was inside a box, the buying points would be at the lower edge of the box. It broke out of the box on Thursday one could look for breakout setup on that day buy side, or one could now look for a pullback, and for the upper edge that was resistance earlier that may turn into support, that support to hold and for price to go up again. That will give a low risk buy point. I actually prefer that kind of pullback to support and going up again, that kind of setup, rather than the breakout setup of Thursday, because for Thursday's breakout the recent swing low was too far, so the stop would be too far to my liking. Of course, this is the index, individual stocks might have different charts. As of now, Nifty 50 is uptrending and preferred trading direction is bullish, though there is no immediate setup in Nifty 50 itself. By the way, India election, national election is ongoing, so that is a major event. Though the technical charts are bullish, I will personally avoid taking new trades either in long direction or in short direction until the election results are out. That will be in the first week of June. When I came to Nifty 50 India, let's look at one stock that we discussed earlier in the market recap that will illustrate the point about this week's topic. This is a stock COFO, Coforge, in India market that I shared a few weeks ago in the same market recap, weekend market recap. Coforge came to the daily trendline support and went up. That gave a bounce long setup. What was the direction? It was still downtrending. And I shared the weekly also in that market recap. The weekly was at support, but clearly weekly was also downtrending. So this is an example of what I explained earlier. When we take reversal trades, it was a bounce reversal trade in the daily interval. When we take reversal trades, the weekly may not match with daily. Actually, it should not mostly match with daily. For bounce trade and also for headwind trade, the weekly will be opposite. So in this case, bounce was on the long side, it was a buy opportunity. For Coforge, the weekly was still bearish. So for trend reversal trades like bounce trades, weekly and daily being opposite is quite normal. If we look at Coforge as of today, looking back, this was the day when I shared the bounce long setup as usual before knowing the results. That was the day. Of course, there was no way I could know the result. Price was going up from weekly as well as daily trend line support. It was a bounce long setup, reversal setup. Weekly was opposite to my trading direction, and the trade happened to make a nice profit. I wouldn't buy now. My technique is always to buy at a lower price level. This trade gave a profit, but now I will not buy. This again, I came to this example that I shared earlier to illustrate the point that for Q reversal trade setups, bounce and headwind, weekly and daily will usually be in the opposite direction. Well, let's look at the USA market now. Let's start with sector industry stock breadth, because that was the breadth analysis I showed when discussing how to decide trading direction using weekly and daily. Let's look at the bucket analysis. Bucket analysis shows the distribution of all the stocks in Q edge, that is S&P 1500 stocks, across their Bollinger Bands. And currently the bucket analysis is very neutral, balanced, neither bullish nor bearish, neither overbought nor oversold. Just a few days ago it was overbought. I think even in the last market recap I mentioned that intraday, some of the days I saw that percentage of stocks in the uppermost bucket, that is above upper Bollinger Band, in real time it was jumping by more than 10%. That was too overbought. And I would anticipate a pullback. I explained that. In the last market recap. It indeed pulled back and overbought condition gave away to a very neutral condition. 55% of stocks are below mid Bollinger Band, slightly more bearish than bullish. Not a lot, not overbought at all. Now I shared this sector industry stock breadth earlier. Let's look at it into a bit more detail. The longer term monthly period is good to know for swing trading, but it is a bit far away to long term to base our swing trading preferred direction. But it is good to know. Monthly is bullish. Why is it good to know, you may ask? It is good to know because in my trading I decide trading direction not only based on where the market is now, but how it is changing. And how it is changing, it is useful to know over these different periods. Monthly, 10-day, both are longer term. 10-day turned bearish. Medium term, weekly interval also bearish. Today is also bearish, only Friday is bullish. So let's fall back and what I explained earlier. How to use weekly and daily to decide preferred trading direction. And I mentioned two things. If weekly is bearish and daily is opposite color, wait for daily to turn bearish, that is red color, and then look for short trades. If I am following that now, then I will not buy now. I will wait to see if next week the daily or during market hours, the real time, this column will turn real time during market hours, that to turn bearish and look for bearish trades. That is one way to use the weekly and daily. The other way I mentioned is that if weekly is bearish and daily is bullish, look for reversal trades, because for reversal trades daily and weekly are expected to be in the opposite direction, just as I showed in Coforge case. So if I followed the second approach, then I might look for bullish trades. Is that confusing? No. Both approaches are possible. Now in the current market condition, do I look for bullish trades as of Friday's close, or do I look for bearish trades, wait for Monday or Tuesday, hopefully daily or real time, to turn bearish and then look for bearish? Which one to choose? Both are possible as far as sector industry stock breadth weekly daily pattern is concerned. Which one to choose will be clearer from the other market breadth analytics. One thing we might look at, or I may look at, certainly everybody can look at, is whether the market is too overbought. We could also look at whether market has internal weakness in breadth charts, technical breadth charts. If those are true, it is overbought, then even if Friday was bullish, that will not lead us to buy. If internal health is weak, even if Friday is bullish, it will not lead us to buy. Also, one thing more is here, I'll show it more clearly soon, that is showing that though Friday is quite bullish, that was not at all enough, nowhere near enough to make up for the decline of Thursday or decline for the week. Especially for today, if you look at the bar charts now and focus on this graph, sector performance 1 day and compare it with 2 day. The 2 day bars are in green color. Over 2 day period, 10 sectors are still down. Only one is up, that is up by a very small percentage. What it shows is that yes, Friday the market went up, but that was a very feeble up move. Not at all enough even to turn 2 day period bullish. 10 sectors are down over 2 days and only one is up, that is also by a very small percentage. When we see that, we don't get, at least I don't get too excited about Friday's up move. 5 day is weak. Friday's up move was nowhere near enough to turn 2 day to mixed. Forget about mixed, it is very bearish, remaining very bearish. Not that 5 sectors up, 6 down, or 6 up, 5 down, nowhere like that. Over 2 period, only one sector up by a very small percentage. That is why Friday's up move is actually a feeble up move when we look at sector industry stock breadth or sector breadth in this case. That point goes in favor of not taking bullish trades, even if we look at the sector industry stock breadth of Friday being bullish. Doesn't allow us to take bullish trades. And that is how we combine all the breadth insights. Just looking at weekly and daily, we could do both. We could look for reversal trades in bullish direction right now, or we could wait for bearish trades next week. Which one to do? We already get some idea from the sector performance over 1 day and 2 days. But we'll get more ideas on that, more confidence on which one to follow from other insights. And for some reason my metastock keeps on closing, or maybe I am closing, when I'm closing the weekly daily charts on metastock, inadvertently I'm closing entire metastock program. Let me run it again. I'm going to open the breadth charts, and there also you will see there are reasons not to buy just based on that Friday's up move. Let's look at the market breadth total view. As I mentioned in the last market recap, from the oversold condition that we could see from 3-month new high low, from the oversold condition that we could see from percentage of stocks above 50 MA, the market recovered. But there was not a single accumulation count, not even of one. That is what I already mentioned in the last market recap. That was showing that though it was gradually going up, market is not that bullish under the hood. And then when you look back, you see there was actually a distribution count. So when it is falling sharply. And this week we have another distribution count of 3. No accumulation count at all in the up move, has not even started to fall down much. We earlier had a large distribution count. This week we have again a large distribution count, and on top of that we have this Hindenburg omen. That is not giving the confidence to buy based on just Friday's up move. By the way, the Hindenburg omen confirmed one came from here. The yellow one was the alert, and this Hindenburg is a composite Hindenburg of NYSE and Nasdaq. You could look at individual NYSE Nasdaq Hindenburgs as well. So in the composite, this was the alert, and then we had series of confirmed Hindenburgs, and still market made a new all-time high. Sometimes a novice trader may think that, well, these Hindenburgs did not work. That is not true. That is not true. What this Hindenburg means, it is based on objective mathematical calculation, and that shows somebody is selling. In fact, they sold. Yes, this candle chart, which is a mixture or a composite of many indexes that made almost a new high, probably a new all-time high. Several market ETFs, indexes, futures made new all-time high. But this selling from professionals actually happened. How do you know? How do I know? We know when we open the individual stock charts. A lot of stocks have fallen a lot in this period. Not that they are starting to fall now. In this period, many stocks have already fallen. I mentioned, I think, in the last market recap this also, that when looking for short candidates, be cautious because many stocks are at already a very low price level. They may be a bit risky to short now. Those were falling already when all these Hindenburgs were coming. So that shows that yes, after Hindenburg's, the market ETFs made new all-time high. That does not invalidate the value of the Hindenburg. Hindenburg's meant, based on objective mathematical calculation again, that professionals were selling, and they indeed sold because many stocks are nowhere near the new all-time high that you can see in QQQ, for example. So Hindenburg's worked in this area. That same Hindenburg has come again, and actually that came in NYSE on Thursday. Traditionally, Hindenburg was calculated in NYSE. Here it is calculated on both Nasdaq and NYSE. You could also drill down onto individuals. That's another reason not to jump into the buying bandwagon based on Thursday's up move. These breadth insights are extremely valuable. Why I also say that is that I recently tweeted something using the breadth charts on May 20, and all these sharings I do before knowing the results. On May 20, this is what I shared, two snapshots, and these are drilled down from total view. First, major indexes, I showed the breadth of Dow Jones Industrials. When you look at 3-month new high low, it was hitting the extreme overbought condition from which a pullback was likely. For DJY, it was true. For Nasdaq 100, that was true. Same 3-month new high low at extreme overbought level, and S&P 500 also, that was true. Not only for major indexes, I also shared the picture of composites, and I showed for NYSE composite, it hit the extreme overbought level from which a pullback was likely. That is what I shared on May 20th. What happened after that? I shared those snapshots during this weekend, May 24th. Look at the 3-month new high low for those same indexes. For Dow Jones Industrials, from this very overbought condition, it sharply fell down. Nasdaq 100, very overbought condition, fell down, came to the mid level. S&P 500 from the extreme overbought level came to the mid level. And the last one that was too overbought, NYSE, from extreme overbought level came to the mid level. So once again, like a clockwork, the 3-month new high low worked. What did it mean when it became overbought? That it was likely some stocks would pull back, and that indeed happened, that we can see from the 3-month new high low coming down. So you could look at reversal trades at the top. When these breadth indicators are at extreme high, you could look for reversal trades at the high, or you could look for trend following trades that were already cascading down. That again shows the value of studying what is happening under the hood using this breadth analytics. So far, the sector industry stock breadth over 1 day, 2 day, 5 day is not giving us confidence to buy. The total view and composites, if you drill down in, giving us confidence to buy, especially keeping in view the large distribution count and the Hindenburg that came this week. What about technical breadth? Technical breadth is in sync with the sector industry stock breadth, and it is good. When things are in sync, we have, or I have, you have more confidence to trade on that. When things are not in sync, it becomes confusing, and I prefer to stand aside. But here, daily technical breadth is bullish, that is in sync with Friday sector industry stock breadth being bullish. Bullish across the board, across all categories. But is it giving me the confidence to buy? No. For one reason is here, majority, very large percentage of these bullish trades are coming from price extreme high. What did I mention earlier? The Hindenburgs actually worked. A lot of stocks fell down. Handful of stocks are keeping the market up. And that is also seen here. The more you use these systems, the more insights you gather. A few stocks that are at a very high price level, they are giving bullish setups. That is an overbought condition, not giving me confidence to buy. And the weekly technical breadth, it is bearish, but that is not the only thing I am seeing here. Even in the weekly interval, majority of bullish setups are coming from price extreme high. Is it important? No. This one I don't use to assess if the market is overbought, because that will be too long term. Price level, price extreme level, not price extreme level for weekly is too long term to decide swing trading direction. So let's avoid that. What I am looking at is the bearishness across the board in weekly, and very importantly, the headwind alert. The headwind alert in weekly interval as a breadth signal works very well. It is showing that further down move is very likely. That is how it has acted in the past. So I am not going to risk my money buying now when I have bearish headwind alert in the weekly interval. Just 1 day bullish move is not enough. Now let's look at the market ETFs. We haven't looked at that yet. The external view, SPY, S&P 500 ETF. Weekly is indecisive, and it is giving a bearish indecision at the top signal. Not a time I'd like to buy. I may not short also. I mentioned one concept in the last market recap. Nowadays I am trying to explain one concept or another in the market recaps. And one concept I shared recently is that if the weekly is indecisive, stand aside. If the daily is indecisive, stand aside. Or condition, not and. So here weekly is indecisive, stand aside. In daily, I was waiting for a false upside breakout, that is for price to come down below this watermark resistance where bearish headwind came earlier, from where price dropped significantly. Though on Thursday we had a bear release signal at price extreme high with a reversal candle, we still don't have the false upside breakout completed. If it completes next week, I'll be happy to look for short trades. Currently, because of weekly indecision, I'm not going to buy, I'm not going to short also unless this false upside breakout is confirmed. Another thing I mentioned in the last market recap and the recent ones, that if you look back on the screen length, the large volume days are mostly red. The Hindenburgs were coming here. Again, Hindenburg came on Thursday. This also shows that actually professionals were indeed selling. And nothing will make it more clear than to look at individual stocks. So many stocks has fallen so much. Though SPY made a new all-time high on intraday basis on Thursday, many stocks are nowhere near that. QQQ on Friday even it made a new all-time high on a closing basis. Certainly not one I'm going to short. Does not have any reversal candle like we saw in SPY. Weekly is also not indecisive like SPY, it is very bullish. This is the one I'm not going to short at all. And QQQ is easily kept up, if I may use that term, kept up. QQQ can be easily kept up by influencing the mega caps, and mega caps are staying up, not everyone, but majority of them. And Nvidia had a huge earnings boost or price boost based on earnings on Thursday that made this new all-time high on intraday basis on Thursday. Price sharply came down after that. That also shows somebody used the Nvidia's earnings result to sell heavily. The sell heavily was not only in Nvidia, not only in mega caps, it was across the board. That gave rise to the Hindenburg alert as well. But having said that, QQQ is not the one I am going to short. Looking at this chart, SPY looks weaker, and I am always in favor of shorting the weaker instrument and buying the stronger one, everything else being equal, which is never equal. These are ETFs. When I'm buying or shorting stocks, I'm looking at their fundamentals and industries, and those may not be same, though the technicals may look similar. Small cap IWM. In one of the recent sessions, I focused on the identification of reversal signals, which came here for IWM. Bearish indecision cluster and bearish headwind. That was the time to look for shorts. IWM beautifully fell down following the Q alerts. Those trades should be profitable. And again, on Thursday, it precisely hit the trend line support and stopped there. So if you shorted IWM in this area at the top using reversal signals, you would certainly book profit on Thursday at the close, seeing that the trend line support is holding. You would not let so much profit erode by this Friday's up move for swing trading. That would not make sense. So again, the broad principle here is, if we are in a short trade when price stops at trend line support, book profit. And if we are in a buy trade when it hits trend line resistance, book profit. Reversal signals work beautifully, the trend line support worked beautifully on Thursday. Now it is inside a triangle pattern. Looking at the breadth insights that I shared so far, I will be happier for trading purposes. Of course, for economic condition, I am always happier if the economy keeps on going up, growing, but that never happens. Market will eventually come down, correct itself, and then go up again for sure. It has always gone up, but it may come down now, and for trading purpose, I'll be happier to see that looking at the other breadth weakness I saw so far. And if it goes up for some reason, I am going to look for a reversal at the trendline resistance. So I may look for a reversal at trendline resistance, or I may look for a breakdown setup from the trendline support. So trend lines can be used in both ways. Breakdown is a valid shorting condition. Reversal from resistance is also a valid shorting condition. What will happen if it straight up goes and break out of the trendline resistance? I am not very much fond of taking those breakout buy setups because the recent swing low will be very far away and my stop loss will be very far away. That is why I don't like breakout trades unless the stop loss is narrow. In this case, if it breaks to the upside straight up, then my stop loss will not be narrow and I will not like to take that. Dia, this is another instrument that showed the reversal signals at the top. Bearish headwind, bearish indecision, bear release. Bear release here as well. And what I explained during this time, the market recap, I was waiting for a false upside breakout. The false upside breakout happened right on this candle. That was the time to short. Also daily had a bearish headwind at that same price level, even weekly had a bearish headwind at the same price level earlier, which led to a price drop. So that was the perfect time in daily at this point to short using the false upside breakout at the close of this day. I actually bought some contra ETF dog, and on Thursday when I saw that IWM, yes, it was not Dia, but IWM stopped at trendline support, I booked my profit. That was a very disciplined reversal trade for which I was prepared ahead of time, looked for the false upside breakout, perfect timing in shorting, but I used contra ETF to buy DOG and I booked profit also with a reasonable profit. Dia in fact fell on Friday. So it is continuing to show weakness, but I am not going to short now because it has trendline support in both weekly daily. None of the market ETFs are telling me to buy. However, there may be stocks, and why I'm saying that is this reason that we saw a lot of Hindenburgs earlier and lot of selling happened earlier. So many stocks are already at a low price level. Some of those may be undervalued stocks. Their industries may be going up now. And very importantly, they may be at a very low price, very narrow stop loss buy point. Those are buying candidates now, not stocks that are at very high price level like the market ETFs, but stocks that fell already when all those series of Hindenburgs came. And remember, I mentioned and I'm telling again, clearly the Hindenburgs worked because a lot of stocks came down. And let me try to find some buying ideas in this current market. If market reverses next week, Friday was bullish, but if it turns bearish again next week, we'll look for bearish trade. I may look for some bearish trades today also. Let me try to go through some of them quickly. Let's look at daily. Go to the daily technical trade setups, and because I am looking at stocks that already fail a lot, I'm going to click this red paint bar that will show me stocks at price extreme low. From thousands of stocks, I am now left with only 18. And I'm going to look at certain patterns. Of course, in real life trading, you may go through all of them, look at their fundamentals, industry strength. I don't want to spend so long time, already near 1 hour point. Let's look at this stock with squeeze move pattern, bullish squeeze move at price extreme low, and I may look at this breakout candidates also happening at price extreme low. Let's do them one by one. Okay, let's use TradeStation. It's always good to have two platforms. So if one is slow, especially during these market triggers, I can fall back on the other. This is MORF. It is at price extreme low, coming out of price extreme low as of Friday's close. Weekly is bullish and daily is giving a trend following long setup. Remember, I mentioned that for trend following setups, weekly and daily are to be aligned. And in this case, we can see that to be true. Weekly is bullish color, bullish shape, and daily is of course giving the flow long setup. And it also happens to bounce up from trend line support in daily. So technically it is giving a buy setup, trend following setup, also a bounce kind of setup, and it is coming out of a squeeze. And if you look at the alternate momentum signals, the squeeze will be very obvious here, coming out of squeeze with a pocket pivot, Mobo breakout, Kahuna, and bullish Bongo. Uh, Bongo, yes. So we have a Q trade setup with additional momentum signals. So fundamentally, we have to check the stock, and let's do that now. I know we are at 1 hour point, but bear with me. The analysis is not to find so much a particular trade idea today, but to apply the technique and be used to the technique more and more. Let's look at this stocks fundamentals. I'm doing this live, not live. And while it is retrieving the fundamentals, let's see if we can look at the other stocks technicals. Maybe I don't have time to look at all of them. Let's look at this last one. Ulta, ULTA, Ulta Beauty Company. It's a well-known company, ULTA. Let's look at that. It has a breakout at price extreme low. ULTA. See, what did I say? A lot of stocks already fell a lot. Ulta is one such stock. The other stock we saw, MORF, was also another such stock. Incidentally, Ulta fell right after displaying the bearish headwind. Bearish headwind came at the same level earlier also. That means it created a false upside breakout. The exact same pattern I used in Dia to short using contra ETF dog. I used that trade today, and in Ulta the same reversal happened in weekly long time ago. Now it is at a low price level where we have trend line support in weekly, and daily is breaking out of trend line resistance. Stop loss is very narrow. So technically it is giving one of the strong technical patterns that at long-term support breaking short-term resistance. And again, this is an example of a reversal setup. Breakouts can happen in downtrend, bullish breakouts in this case can happen in a downtrend, and we don't expect weekly and daily to be in sync in a reversal trade. They are in opposite direction. Weekly is coming down sharply, but still we are able to take a reversal breakout trade, provided fundamentals are good. But let's look at the MORF, the other stock that we found as a buy candidate, its fundamentals. Now I see first of all it is biotech, and it is a small cap biotech. No earnings growth, negative earnings growth. In fact, though it is improving, but it is negative earnings growth, medium valuation, no fund accumulation, company doesn't make money, company doesn't make money. But this is a biotech. That's why it is more challenging to buy biotechs, especially the small cap biotechs, not so well known companies. One may know about the stock a bit more. I can see insiders are buying, but just looking at insider buying is not enough for me. I'm not an expert in biotech. Dr. Jeffrey, a great trader and my friend, and learned from him a lot. He may know more about, he certainly knows more than me about biotechs. Not sure about this company, but for people like him, it is easier to decide. For me, I'll stay away from MORF because this fund accumulation, earnings, even earnings quality, and the fact it's not making money, which is common for small cap biotechs. In any case, technically it is giving a buy setup, but it is not a 360 degrees buy setup. Fundamentals are not strong, and if I looked at industry score, well, no reason to buy in terms of industry score also. So only reason one could buy is because one knows something about this biotech company. We can see what it is doing, study a bit more. Insiders are buying, short squeeze is there. Technically the chart is okay. And let's look at Alta. So MORF, I'll not buy personally. I am not expert on biotechs. Though technically it is giving a nice chart pattern. And now we are looking at ULTA, that is also giving me a low risk buy pattern with weekly support. It's not a biotech. Let's look at its fundamentals. Here I have more reason to buy. I'll come back to the fundamental scorecard. Let's look at its industry score also. Industry score has reason to buy. See, it is not like biotech industry. For other specialty retail, over 2-day period it is one of the strongest. Over 2-day period it is also showing acceleration to be one of the strongest. So industry score allows us to buy. And incidentally, both over 1-day period as well as 2-day period, we saw over 2-day most of the sectors were down. 10 sectors were actually down, but consumer discretionary was up, and this is actually consumer discretionary industry. So that is a reason sector industry both allows us to buy. If I go back to the fundamental scorecard, see the difference between MORF and this. MORF had poor earnings quality, this has strong earnings quality, and instantly I can see this company is profitable. Whether we see last 12 months earnings per share or earnings per share of last quarter of the last financial year, it is making money. consistently with good earnings quality, and now earnings is accelerating. I like this tick mark. Come down and go up, reversal in terms of earnings growth, reversal in terms of revenue growth. Revenue growth also tilted down and going up again. That is a stock I'd like to buy in terms of fundamentals, and industry strength was also good. So I could buy one 360 degrees buy candidate ULTA, but with the current market condition, when I'm finding a setup like this on Friday, I'm not willing to buy on Friday. I'm willing to buy only if price can go above Friday's high next week. So I'm not rushing to buy in the current market condition. I will keep it in my list. MORF I'm adding in my list here, but I may not buy it because I'm not expert on biotech. And because I mentioned that, I showed actually that there is enough reason to look for shorting candidates. I did try to find some shorting ideas, but again, as I mentioned, a lot of stocks have fallen a lot. It is not easy to find shorting candidates, though the ETFs are at or near all-time highs. Professionals really sold many stocks, but I did find one stock that is at a high price level and maybe a short candidate, but I did not complete the analysis. Let's look at this stock's technicals first. CERE. Now one thing is concerning is why it was moving sideways for so long. I didn't do enough study. I just found this stock as a breakdown short candidate at price extreme high. So how did I find it? Similar to how I found price extreme low buy setups, I went to bearish setups, look for price extreme high bearish setups, and this is the stock I found. CERE. Exactly opposite technique that I applied to finding bullish setup, I applied to bearish setup. Okay, so CERE, it is coming down from price extreme high with a breakdown short setup, but again what is concerning is why was it moving sideways for so long? Was there a takeover proposal? If so, then just looking at this breakout is not going to let me short it. Takeover candidates are not shorting candidates, but you may study that. That is how the chart is looking. If it is not a takeover candidate, we have to understand why it was moving sideways for so long. Not difficult. All we have to know is find out what happened on this day. Easy to find out that using icon, because in icon I can look at events happening every day on the financial chart. So that is how I find out what led to this huge gap up. If it is not a takeover candidate, it's giving a technical short setup, but let me look at its fundamental also. CERE, is it CERA? Yes, CERA. CERE happens to be again a biotech. It's a mid cap, not small cap, but mid cap biotech. For biotechs, I'm not very keen to go long or short because I don't know enough. They may suddenly go up or down due to some announcements, even other than earnings. Quite common for biotechs to do that. So I'm not going to consider shorting this stock. If it was not a biotech, the fundamentals are weak enough for me to short. An industry, we already saw biotech industry is weak, but because it is biotech, I am not going to consider shorting. Remove it. Let me remove MORF also. So for short side, you may do further analysis using Q Finder to look for 360-degree short candidates if you want to do that. I will watch the market next week. If it is reversing down, I'll look for shorting candidates that are not already so low like ULTA. For stocks like ULTA, I may look to buy. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session next week. Have a great weekend. And as I always say, as these live examples hopefully show, there is no reason not to do that. Trade profitably. Thank you.